GNPX up a modest 5.26%. This is Tuesday, the 28th of October, 2025, pre-market session. The stock is still contracting the expansion of the 15th of October. Yeah, was that one day? I think the expansion that began sometime on the 14th and ended on the 15th of October, it's still contracting that expansion. The extrapolation is saying that by today would have had a bounce. So far, so good. This extrapolation has passed. So far, so good. But we can't rely completely on this at all. Projections are currently saying $36.06. No guarantee that that will be the case. Okay. Let's just see what's going on its 4-hour chart. Yeah, for the yes, it's just doing what it's just doing what extrapolation is saying. Going to rebound or going to bounce. Projections here are saying 11.01, 19.12, 23.48, 26.17. As of the 24th of October, that was Friday, had as high as 6.1. Okay. Price pressure momentums, the stock is still bearish. The 10 and 21 period moving average. Okay. Positions opened 10, 40 hours ago, just in profit at the moment, but not the ones opened 21 days ago and all the other ones based on this 4-hour chart. So the stock is currently trending. Let's find out what's going on with the stock.
What's driving recent interest? Genprex Inc, GNPX. Positive preclinical early data on Reqorsa plus ALK inhibitor combo. Genprex announced that collaborators would present positive preclinical data at a recent scientific conference showing that combining Reqorsa, which is quaratusugene ozeplasmid, with an ALK inhibitor produced longer survival in a mouse model of ALK EML4 positive non-small cell lung cancer. While the public disclosures so far have focused more on lung cancer more broadly, for example, the upcoming presentation/design for the ACCLAIM-3 trial combining Reqorsa with Tecentriq in small cell lung cancer, the news of the ALK combo is being interpreted by some in the community as a hint that Genprex may be broadening the potential indications for Reqorsa, perhaps toward molecularly defined NSCLC subtypes with ALK fusions. Why that matters. ALK EML4 fusions are a well-recognized driver mutation in a subset of NSCLC, and ALK inhibitors are already part of the standard of care. If Reqorsa can augment or synergize with ALK inhibitors, it could open a more compelling value proposition beyond just add-on immunotherapies. Preclinical survival extension in a mouse model is a promising signal, but it's a long road from that to human efficacy. Many therapies look good in animal models but fail later in clinical phases. Investors are seizing on even modest good news in small or early stage biotechs, hoping it may presage more material updates. Strategic positioning, patents, and regulatory designations. Genprex has already been granted fast-track status by the FDA for Reqorsa in lung cancer contexts. The company also recently announced that it received notice of allowance for multiple patents related to combining Reqorsa with PD-1/PD-L1 antibodies to treat cancers. On the clinical front, the ACCLAIM-3 trial, Reqorsa plus Tecentriq, in extensive stage SCLC as maintenance, is being positioned actively. The company has published the trial design and is seeking to enroll patients. The ACCLAIM-1 trial, NSCLC setting, combining Reqorsa with targeted therapies like osimertinib, has also shown some early encouraging signs. In fact, Genprex reported that a couple of patients in the phase 1 escalation of ACCLAIM-1 achieved durable progression-free survival beyond expectations. So from a scientific and strategic viewpoint, the company is showing that it is attempting to build a platform that spans gene therapy plus immunotherapy plus targeted agents and is trying to protect it with patents. What are the risks and concerns? Reverse stock split and dilution risk. To maintain compliance with NASDAQ listing rules, minimum bid price, minimum stockholders' equity, Genprex has implemented a 1-for-50 reverse stock split effective October 21st, 2025. The reverse split comes after the company received a hearing panel exception from NASDAQ to meet listing standards through October 31st, 2025, with possible extension. The effect. The number of outstanding shares was dramatically reduced post-split approximately 1,432,626 shares outstanding per public disclosures. In short, the reverse split raises the per share price on paper, but does nothing to the market capitalization or underlying fundamentals. For retail investors, it often feels like optics rather than substance. The big concern among skeptical investors is that reverse stock splits are often precursors or enabling moves for further dilution. The company may issue new shares or convertible securities later to raise capital, which can erode existing shareholders' value. A recent 8K filing explicitly lays out that Genprex plans to pursue registered direct offerings to raise money up to $8.1 million at the market under certain rules following the split. Some community commentary already flags this. Quote, reverse split complete. The float smaller, the stage is bigger, but if they deliver on the science, this new share structure could actually work in their favor. End quote from Reddit. There's also skepticism. Quote, reverse stock splits are the kiss of death signal. End quote from Reddit. Quote, reverse stock split will only lead to increasing the OS, which will lead to more dilution. End quote from investorshub.advn.com. So while some see it as a tailoring or cleanup move to attract institutional interest, many view it as a red flag for future dilution. Execution risk, clinical, and regulatory risk. Even promising preclinical data need to survive translational challenges, especially in human trials. Enrollment, safety, side effects, manufacturing, scale, and regulatory acceptance are all high hurdles. The timelines and public disclosures are aspirational and may slip. The company is under pressure to demonstrate enough financial stability to stay listed and fund operations which can drive decisions that may not align perfectly with ideal scientific progress. Manufacturing, funding, and cash burn. As a small biotech/gene therapy company, Genprex likely faces heavy cash burn as it advances clinical trials. Without successful capital raises and strong execution, fundraising could become more dilutive. The company's stockholders' equity was cited in the 8K filing as approximately $1.39 million as of June 30th, 2025, which is below the NASDAQ minimum requirement. Because they obtained a panel exception to extend compliance only temporarily, the pressure to raise capital is intensified. Over-reliance on hype and sentiment. Stocks with low float and high speculative interest, especially biotech, are prone to wild swings based on rumor, technical setups, or squeeze narratives rather than fundamentals. Community forums often speculate ahead of news events. For example, upcoming scientific abstracts, clinical updates, regulatory filings. That can lead to strong volatility and sometimes misleading narratives. In cases where anticipated catalysts don't materialize, sentiment can reverse quickly. Community sentiment and speculative angles. The community discussion largely revolved around two clusters of belief. One, bullish/speculative, the squeeze bet mindset. Low float, especially post reverse split, is seen by some as conducive to a short squeeze or sharp upward move if any positive news emerges. Some believe that new data releases, conference abstracts, trial readouts could trigger outsized moves. Some stakeholders view the reverse split as a reset to attract institutional interest, which might unlock capital and partnerships. 2. Cautious/skeptical. Many warn that the reverse split merely sets up conditions for dilution and that future capital raises will water down existing shareholders. The pattern of small biotech firms implementing reverse splits and failing to generate sustainable value is often cited as a cautionary historical analogy. Some argue that unless the upcoming clinical data is blockbuster, sentiment may fade quickly. Thus, one sees a tug of war. Optimism about potential upside from scientific progress versus fear of dilution, execution risk, and misaligned incentives. Key upcoming milestones and what to watch. To evaluate how the story might unfold, keep an eye on milestone/event, conference presentation/abstract release of the ALK Reqorsa preclinical study. Why it matters would be the formal unveiling of the data now being teased, clarity on what was tested, effect sizes, and relevance to humans. Timeline guidance. likely within upcoming cancer/molecular therapy conferences like AACR, etc. Interim readouts or enrollment updates in the Acclaim 1 NSCLC setting and Acclaim 3 SCLC setting. Why it matters. Clinical data are the ultimate determinants of value. Early positive signals could drive sentiment hard. Timeline. The company has mentioned plans for interim checks per AK, Acclaim 1 intermediate enrollments, approximately 19 patients, followed by mid 2026 analysis. Milestone/event capital raises/financings, e.g., registered direct offerings at the market issuances. Why that matters will determine the company's runway, dilution risk, and ability to execute planned trials. Timeline. The AK already mentions an $8.1 million offering as part of its post split strategy. Milestone/event regulatory/listing compliance updates, NASDAQ status, panel decisions. Why that matters. Failure to maintain listing or additional requirements could add pressure on the share price. Timeline. The panel exception is valid through October 31st, 2025, possibly extendable to February 2026, but no guarantee beyond that. Milestone/event patent grant/IP updates. Why that matters? Strengthening of intellectual property around combination strategies, Reqorsa plus PD-1, etc., could bolster long-term value. Timeline. Already some allowance notices are public. Bottom line and balanced view. Genprex is an extremely speculative biotech play at this stage. The recent buzz stems from teaser preclinical data around an ALK inhibitor plus Reqorsa combination, a reverse split that significantly reduced the flow and raised eyebrows, the interplay of patent strategy and regulatory designations that suggest they are trying to build a defensible gene therapy IP platform. However, the risks are substantial. Clinical translation is fraught and many early signals fail. The reverse split doesn't change fundamentals. It may simply cloak dilution risk. The company must raise capital, and that often means diluting current investors. Sentiment driven moves can be fast and fragile. If you're considering exposure, this is a high risk, high volatility.
Okay, so thank you very much for watching this video.